So did you know there's more cost to buying a home than just the purchase price? So we're going to break down all of the costs that it takes to purchase your first home. So number one, of course, is the down payment. That's the number that everyone knows about. You can even do a conventional loan with as little as 5% down. So it's between 5 and 20% for a conventional mortgage. Of course, you can put more down than that if you want to, but you're going to get the best rate and terms at the 20% down payment. There's also the FHA program, of course, and there's the VA program for veterans. But the FHA program is 3.5% down. So they're going to loan at 96.5% of the purchase price, which is amazing. I think the FHA program is great for people that don't have a lot of money down or don't want to put a lot of money down in their property. Of course, their payment is going to be higher because it's on a bigger purchase price, essentially. But the interest rates on FHA are actually very, very low because it's a federally backed loan. So there's all of the closing costs. People know about closing costs. They think it's usually escrow and title, but it goes a lot further than that. So escrow fees are the fees that go to the escrow company for handling all the paperwork for the transaction. They are the middleman that go between the lender, you, and the seller. So they're handling the money, handling all the paperwork, working with the title companies, and really facilitating that transaction. The next cost is the title insurance. Title insurance is required by your lender, basically secure their position and your position in that property. It's insurance for you against any title issues that may come up or may arise from the sellers or past, clouds on title. So that also protects the lender's interest. So you're paying your own premium and you're paying the lender's premium. The seller also has their own premium on the title insurance. So everyone pays title insurance when purchasing a home. All of your lender fees. So there's usually a processing fee through the lender. There's a lot of junk fees. I call them junk fees, but they're there for a reason. But there's recording fees, there's processing fees, there's appraisal fees is another big one that really comes from the lender, but you are responsible to pay for the appraisal on the property. If you work with a lender, sometimes they'll waive these or they'll cover them for you, but these are the costs that are going into it. An appraisal usually costs you $500 to $600. Another thing that people don't really talk about are impounds. The impound account is, if you choose to do it, which most people do, is an account, basically an escrow account that money goes into to pay for the property taxes and insurance. Lenders usually want you to do impounds because it's you paying every single month a few $100s into an account that they will then use to pay for your yearly homeowner's insurance bill and the bi-yearly property tax bill. So that'll be automatically paid by the lender. You don't have to worry about it. I always use impounds on all of my properties when I purchase them, just so I don't have to keep up with all the property tax bills and all the homeowner's insurance. That just gets automatically paid. You don't have to think about it. It's kind of autopilot, which is very nice, but there's usually an upfront cost to that. You usually have to prepay your impound accounts 4 to 6 months. So you're paying 4 to 6 months of that impound cost to start the account so that when it comes time to pay those bills, there's money in the account to pay for them. We also have home inspection. When you go to purchase a property, you have a due diligence period. You have to inspect that property, and there's an inspector that does that, and you have to pay for that bill. It's usually about $300 to $500 depending on the size of the house, but another cost that goes into it. That home inspector is going to go through the house and basically show you every single little thing that's wrong with it. So you can be an educated buyer and go through and request those repairs be done by the seller. That's always a negotiation that happens during escrow. You do the inspection and you request either those repairs be done or credit for those repairs. One last thing that goes into this that is very popular now is called a rate buy down. A rate buy down is a process where you can actually pay money for a lower interest rate. So a lender will show you a scale basically on how much money it takes and what interest rate you can go down to. So it's become very popular these days with higher interest rates. Buyers are actually asking the seller for credits, usually to help cover these costs these days because the costs are so much, and a lot of times they're using that money to buy down the rate. So a lot of times you can buy your rate down from 7% down to even 5%, and you're really lowering that monthly payment and that monthly interest expense for not a huge amount of money. Especially if it's funded by a seller credit, it's not really costing you anything. So it's become very popular these days is asking for a seller concession for a rate buy down. So those are pretty much all of the costs that go into purchasing a home, and they do add up. Just the impounds alone on my property when I purchased it, I think my prepaid impounds were like $6,000. It's not just the 20%, really be an educated buyer. And a lot of times you can lower your down payment to cover all of these costs that you didn't really expect. A lot of people come up and be like, I saved 20% down. I want to buy a $500,000 house. I saved up $100,000, but really they might need $120,000, $130,000, or $140,000 to really complete that transaction. So a lot of times they will lower their down payment to say 10%, only putting $50,000 down and using the rest of it to help cover those costs, buy furniture, move into their property. You know, there's always things that come up when you're moving. You know, moving expenses alone, again, furniture, furnishings for your property, there's always things that come up. So having more money than just that 20% or 10% down is a good idea. So if you enjoyed this video, please like and subscribe to our channel. Thank you.